Fed minutes are due out on Wednesday, and most traders are looking to find out if they can find more clues as to when the Federal Reserve may begin to draw down its quantitative easing program. And here to talk to us about it today is Mike McGlone. Mike, it's good to have you back in the studio.
Thanks, Joe. Good to be back.
So, Mike, everybody's looking at the so-called tapering, and they're trying to figure out, or is it going to come in September, or is it going to come later? Is this priced into gold market yet?
It appears to be. I
Okay.
mean, we had that concerted Fed speak just a few weeks ago where a few Fed governors came out and said, worry about tapering. It could happen in September. And that generally happens when they want to make a point to the market. And then we went back and we looked at the market and what it's done and where it's gone. And when QE2 was announced, gold was essentially about the same level, around 1350. And it's had us run up to 19. So gold's had a significant correction. It's corrected 40% from the highs, approximately. It's recovered. The equity market's a little bit more dicey, and I think that's what most investors are worried about as they come back from vacation, as the kids go back to school, and they're looking at, oh, well, precious metals have really had a pretty substantial correction, yet that equity market at all-time new highs, certainly U.S., and getting a little bit dicey here might be more the greater issue, and that seemed to be the key, what really happened last week. Equities corrected, and precious metals proved their diversification benefits.
What about the gold ETFs? I know you guys are running a gold ETF. We've seen we've seen inflows of gold into these ETFs again. Are they well priced?
Well, the fact about ETFs this year is, in terms of gold ETFs, total gold ETF AUM is not AUM, but ounces under management have declined about 25%.
Yeah.
From 84 million ounces to about 62 million ounces. That's total gold. The significant, so you're seeing a correction. A lot of that gold seems to be moving from more speculative hands to more strategic hands in the East.
Sure.
Strategically held hands and investments. What's the significance, I think, is what's happened in the silver ETFs. All-time new highs, 642 million ounces in silver ETFs. As of, I think, yesterday, that's an all-time new high. So I think what's also happening is this paradigm shift in gold protection is still important, but people are more focusing on what's happening globally, GDP growth, industrial demand, and that's more silver, platinum, and palladium, and that's happening in ETFs.
So right after the minutes come out today, do you think traders or investors should be immediately trading on the yellow metal and the white metals, or do you think they should take a moment to kind of take it all in?
Always take a moment. As we say, let the junior traders do the immediate trading. Let the high-frequency traders do that. Sit back and wait and see what the market tells you and how it reacts. And I think it's going to be more of the same. And the market's recovered. It's already priced in a bit of tapering. Sentiment has shifted. Don't expect a major shift from the Fed. And if they reduce this massively word of tapering, if they reduce that prospect and gold and precious metals decline, it'd probably be more of a buying opportunity.
All right, Mike McGlone, as always, thanks so much.
Thank you.
For TheStreet, I'm Joe Deaux.